Hello, good day traders. What's good? Good afternoon, good evening, good morning, wherever you are watching this from. I would like us to analyze the market for today, Gbpjpy. The market is kind of ranging, so I would like to analyze the next place where the market would go. I'm doing this analysis with my trading view. As you can see, this is a trading view terminal. So we'll begin our projection as soon as possible. So first of all, before we start our prediction of price, we first of all begin with the higher time frame. I normally love doing my analysis beginning from the higher time frame. So from the higher time frame, from the weekly charts, we can see that the market is actually tending to go towards the upside. The trend is still an uptrend. Yes, the market is still maintaining an uptrend disposition at 181.31. As you can see, if we use our arrow tool, you can see the price has refused to break this point in the weekly chart, 181.33, within that region. We'll also scale down to our daily time frame to further see what the market is telling us. It's normally best to begin your analysis using a higher time frame so that you are going to get a bigger picture of the market. It helps to begin your analysis from the higher time frame, so that you are going to see the overall picture and structure of the market. You will definitely know the potential that the market has. If the market has the potential to make 100 pips or 200 pips or 500 pips, as the case may be, that is what a higher time frame helps you to do. And it also helps you from taking low and medium probability trade. Higher time frame oftentimes helps you to take very high probability trade, and so that's why it's normally nice to begin your analysis using a higher time frame. So after scaling down to our daily time frame, we'll also scale down to 4-hour time frame. This is where we are going to begin to decide where we are going to enter our trade. So from the 4-hour time frame, you can see, though the house, you can see please, I beg your pardon, I'm also into real estate, so I normally get messages concerning real estate. So you can see that at this point the market is ranging from the 4-hour time frame, but we have already gotten a bigger picture and the market is tending towards the upside, and so we'll begin to employ our tools in order to effect a proper analysis. We are going to come down to the point where if the market breaks a particular point, we will know whether we are going to take a buy or a sell trade, as the case may be. So from this point, we can see that the market is ranging. Actually from 1.8000. This is a very strong psychological level. You see that from last week. One good thing about TradingView also tells you the date, tells you the particular date where what happened with a particular currency, what the price actually did within a particular day, within a particular week. So you can see on the 13th of July, I think probably that was last week or 2 weeks ago, you can see the price reached this point. Market price reached this point and then started going upwards. It came to 1.8200 on that key psychological level on a 4-hour time frame, and then started coming back. It reached this point again and started going up, and right now we see the market actually reaching this point and then forming a bullish engulfing candle. As of the time I'm taking this analysis, my time is around 14 minutes past 1. I'm a New York time trader. I normally love doing entering my trades during the New York session. I'm a New York session trader actually, so I normally love entering my trade during the New York session because I believe that's the time that the market has a higher volatility, and that's the time often that major news, high impact news must have been released, because I normally love aligning my technical analysis with my fundamental analysis. So from the 4-hour time frame, we are seeing a ranging market here, but we are not just going to enter this trade immediately. We'll have to wait for this bearish candle that is forming here to close, and I think it normally takes an interval of 4 hours for these candles to form on a 4-hour time frame. As the name implies, each of these candles take a duration of 4 hours to complete. That is, the 4-hour time frame is actually a time frame that tells you the movement of the price, the formation of price within a particular time period. So on a 4-hour time frame, for instance, it tells you how the market prices have been behaving within the 4-hour period. Yes, within a period of 4 hours. So we can see at this point, at the bearish engulfing candle is forming. It's also important for you to know that a bearish candle is not necessarily the red candle, although that is what is normally obtainable in most charts. But I think the best definition of a bearish candle would be, bearish candle is simply a representation of price, is actually a candlestick that indicates, that closes below the opening price. Yes, when price closes below its opening, when the price a candle closes is lower than the price it opened, it can be said that price is a bearish candle, because I can equally decide to label this candle or change the color of this candle from red to blue or whatever color that I may choose. So bearish candle may not necessarily be red. That is why some charts you can see the candles will be black and white. So a bearish candle is a candle whose closing price is lower than the opening price, while a bullish candle is a candle whose closing price is higher than the opening price. You can see the opening price of this candle was here at 1.80.51, and then it closed at 1.82, somewhere around 182.46. And now this bearish candle will have to wait until 2 p.m. for the price to completely close before we are going to take a sell. Yes, what we will take here is a sell, but mind you, we are going to take a temporary sell, because as you can see here, the market is a ranging market. Yes, the market is a ranging market, and it's also forming a lower high, lower low formation. Yes, that is one of the importance of using a 4-hour time frame. Remember, I said that it is important to engage the higher time frame for a bigger picture of the market. You need to see the bigger picture of the market. This market from the weekly time frame and daily time frame, as you have seen, you can go back to it again. From the weekly time frame, we are seeing a bullish market structure. Yes, the market tends to be bullish. The uptrend position is still maintained. And so we have to wait for price to break this point where price was rejected, 179.86. You can see at this point, yes, this is actually the lowest point that the price reached. So until price breaks this level completely and then retest, we are not going to take an aggressive sell. I don't know whether you understand that. Yes, we are not going to take an aggressive sell. You switch on to the daily time frame, you equally confirm that analysis. So on the daily time frame, price was still forming, price was kind of ranging around this point. Here on the daily time frame, price was actually ranging around 179.76. You see, whenever price closed at that point, it often will not break this point. Yes, whenever price reach that point, it will normally tend to retest and continue its movement upwards. Yes, whenever price reach 179.77 to 179.50, price will tend to go make a retest upwards, and so we are not going to go aggressively on taking our sell trade. So the reason we are taking a sell trade is because of the ranging pattern that this market is forming on a 4-hour time frame. One of the characteristics of an uptrend is that an uptrend makes a series of higher highs and higher lows, whereas a downtrend makes a series of lower highs and lower lows. I will show you an example of that in a moment. Okay, let's delete this tool first. Let me show you an example of for instance, you can see this is still on a higher time frame. The market was forming this is a good picture of an uptrend on a 4-hour time frame. It's forming a good pattern of higher highs and higher lows on the 4-hour time frame. You can see a higher high and higher low formation simply means the movement of prices up on an upward and downward pattern per time. You can see price moved up and then it moved down a little bit. It continued its movement up and then closed below, and then it continued up again and then closed below. So at this point where the price reached, for instance, this price where the price at this point the price actually went up higher and then closed lower, but however this low point at the price actually closed was actually higher than this point. So that's the higher low there, and then this point where the price reached is actually higher than this point where the price reached, and this point where the price actually reached again later is actually higher than this point. So the price kept making a series of higher highs and higher lows. So that's the kind of pattern that is formed in an uptrend. But we are not trying to define what an uptrend is or what a downtrend is in this video. We are trying to analyze the markets and so determine the trading decision we are going to take at the end of the day. So from our 4-hour time frame alignment, whenever you take your analysis beginning from the weekly time frame, you have to ensure that the 4-hour time frame aligns with the overall picture of the market before you take your trading decision. I don't know whether you are getting it. Yes, the 4-hour time frame has to align with the bigger picture of the market. So you can see the 4-hour time frame does not seem to be in complete alignment with the bigger time frame picture, because you can see on the 4-hour time frame the market is actually ranging, and a ranging market, anything can happen in a ranging market. The market can either break this price, the market can decide to break this point 1.8200, this psychological level, and continue upwards because the market is actually a bullish trend, is an uptrend after all, or the market can continue ranging, can come down to this point. But I think it will be best to actually take a short trade, take a short-term trade. What I mean is, if you, after this candle closes and you decide to enter this trade, you should not trade beyond 30 to 50 pips, at most 50 pips. That is what should be your target. That is, your trade should not go beyond 1.8000, because whenever you see the price is actually forming a series of double bottoms here, when price reaches the point, it continues its movement upwards at this psychological level, you can see. So this has actually formed a pattern of a double top pattern here, and when it reaches point again, the price went up, forming a series of double top and double bottom. It reaches point equally, it came down, and it reaches point again, it's now coming down. And besides, it's also forming another pattern of lower highs, lower low, because this low is actually higher. At this point, the behavior of the market is such that it tends to go up, but then the sellers have actually pushed it down further, forming another pattern of lower high and lower low. This is a kind of a ranging market in an uptrend, and so if you are taking a sell position, you don't have to allow it exceed 30 to 50 pips, and then your stop loss must not be beyond this level. So before we take a sell trade finally, we are going to wait for this candle to form before we click our sell button. So that's it, guys. Thank you so much. We are in this game together. There is nobody that is a know-it-all as far as forex game is concerned. As far as the forex business is concerned, there is nobody that has every knowledge about the forex market 100%. I mean, there is no professional trader that does not make a loss. So we are still in a learning process. That's why I said we should analyze the trade together. So let's go make profits, and besides, keep your risk management. Do not risk more than what you can afford to lose. Thank you. Before saying goodbye, I would like to make a humble request that you click the like button and also share this video so that YouTube will make it available to many people who want to know who do not even have any idea on how to analyze the market. Thank you so much. I really appreciate that. Bye.